Hello and welcome. Let me quickly take you through what's played out in markets and the Nifty. Kind of a choppy day of trade. We were moving one direction, then the other, pretty much all through the day. We started in the green and we've closed largely in the red, and we spent a better part of the day in the red. When you're looking at the advanced decline on the Nifty 50 index, it's 3:2, but some of the heavyweights, HDFC, RIL, contributing to the negative move on the index. It's essentially the breadth which has enabled that the Nifty hold up 2% lower on HDFC Bank after the kind of carnage we've seen on the stock yesterday. This week has been a tough week for HDFC Bank, down 6 to 7% in trade this week alone. When you're looking at broader markets, though, looked in fine fettle in comparison, completely zone of their own. Mid-cap up a third, small cap up 0.5% nearly. You saw some good moves and moves sustaining all through the day. Really, that's what really stood out as well. The Nifty 500 also, the breadth was worse than the Nifty 50, frankly, and yet the Nifty 500 landed up outperforming. But some names really stood out. Karur Vysya, Gabriel India, M&M Finance, Data Patterns, Gujarat Fluoro, TVS Motors. A bulk of those on the back of earnings. M&M Finance, robust set of numbers. TVS Motors, strong beat. Karur Vysya, good commentary. All of those really up and away in trade. Zentech was the other one, 4.5% higher on the back of an order win that came their way. There's also Manappuram, which was perked up 4.6%. So some very good moves seen across names. ABSL AMC, on the other hand, 6.5% lower. Knock-on yields is what we've seen. So despite some decent AUM growth, the yields have taken a bit of a knock. Gallant Ispat is the other one, 5% lower. Transformers and rectifiers will have their con call before the day of trade of Wednesday, and therefore that 5% knock, well, we'll wait and watch as to whether that sustains, but we spoke with management. Paytm was the other one, 4% lower. So that was broadly the tilt from a stock perspective. Sectors, and we spoke a little bit about sectors, but PSU Bank's IT, oil and gas down, auto, defense, realty and metals. Those were the ones which really led the way in trade today. But the FNO snapshot. Sajid, take it away.
Thanks, Harsh, for that. The market trying to hold on to 24,200 for the better part of the day, and then finally, buckling on the expiry and closing below the 24,200 mark there. But if you look at the index, it looks like nothing happened in today's trade, but the open interest is up nearly 1.8%, and the Nifty ending at a discount of nearly 2.7 on the expiry day there. But in the banking side, you again seeing some kind of flat movement coming in. The close is flat, but look at the open interest, which has gone up 4% up. We're seeing some rollovers also happening for the Nifty Bank to the next series, which is the August series, and that's what the open interest is also showing. So there's an unwind which is happening in the July and transfer of some of the open interest to the August series there. Call and put writing, 24,200 has been the most active in today's trade. In the Nifty Bank constituents, you had HDFC Bank, SBI, BOB, Bank of India, and Bandhan Bank adding some short positions, while we saw ICICI Bank, Axis, Kotak, and PNB adding long positions there. Call and put writing. It's been a hectic call and put writing for the 28th July series, which is also the monthly expiry for the NSE. Call writing seen in 24,200 levels. If you look at what's happening in the distribution chart, we see that the band is very simple between 24,000 and 24,500, and in between you have now the 24,200, which is also acting at the slight resistance. So every time you're going to see Nifty inching above 24,200, you're going to see some pressure of selling coming in there. Future gainers coming in, TVS Motor, long build up, seeing Manappuram Finance and Muthoot Finance, both of them. The gold financiers seeing some kind of long build up and short covering in today's trade there. In the losing pack, you have Wari Energy, you had Premium Energy and Paytm. So both the two solar companies impacted by the recent extension to the ALMN list, and that's impacting them, and that's we are seeing short build up happening there. The stock's down nearly 4% in today's trade. Paytm after the earnings down 3.7. The numbers were decent, but the board decided to not to go ahead with the bonus issue, and we're seeing some disappointment coming in for Paytm. Among the open interest gainers, you have NHPC, where we are seeing a short build-up. Info Edge is seeing a long build-up, and Amber is seeing a short build-up there. Among the losers pack, you had stocks like Nuvama, where we saw a short covering. Sona BLW is seeing a short covering, and Delivery is seeing a long unwind. So the market closing below 24,200 levels. It's going to be interesting. Last week of the July series, we'll start seeing the rollovers happening with bank stocks, especially the private banks, already starting some of the rollovers, with HDFC rolling over roughly around 18-19% of its positions to August and September.
Okay. All right. That's the take coming in from an F&O perspective. Let me go across to Meryl. She's here with some of the cues you want to keep on your radar for Wednesday's day of trade.
Right, so these are some of the major developments which could be seen shaping markets on the 22nd of July. Starting first with the global cues, there's UK CPI data to watch, and from Japan, trade data will be in focus. In terms of global earnings as well, it's a big day. We've got Alphabet, Tesla, IBM, and many such names set to report their second quarter results. Back home as well, it's a major Nifty earnings day. We've got Eternal, Nestle, and Dr. Reddy Labs. So three of major Nifty companies set to report their first quarter results. So do watch out for these counters as well. In terms of corporate actions and board meetings at home, we've got Triveni Engineering in focus, where the 22nd of July marks the record date for eligible shareholders to receive one share for every Triveni power transmission share that they've held in Triveni Engineering. So also watch out for the status hearing, which is going to be in focus, which is scheduled for former Venezuelan President Nicolas Maduro in US narco-terrorism and drug trafficking case. So these are some of the major events that we should track on the 22nd of July.
Thanks, Meryl, for that stocks to watch. Keep a watch for these stocks for tomorrow's trade there. But joining us now is Kapil Shah, Senior Technical Analyst at MK Global Financial Services. Kapil, thank you very much. We tried holding on to 24,200 levels, but finally ended below. How do you see the market at this point?
So from 25 trading sessions, we have been seeing a very range-bound market. On the lower side, 23,800 is acting as a support, and on the higher side, we are seeing that 24,200, 300 is acting as a resistance level. So the state of the market is in a kind of the sideways to positive, but any shorts of a declining momentum can be used as a buy opportunity. But this is not a market structure where we can chase the momentum.
Okay, and Kapil, therefore, what should the sectoral bias be like? Because there's been so much of sector churn over the last few days, in fact, of trade, and even weeks of trade.
Right, means as far as the sectors are concerned, I would like to look at a kind of the very niche sectors that is trying to pick up the momentum. So let's say recently we have been seeing the chemical stock has started to pick up the momentum. Some sorts of oil and energy stock has started to pick up the momentum. So as a niche category, these are the two packs that I am looking at.
Some of the NBFCs, Kapil, especially Shriram Finance, we saw some bit of activity happening in Muthoot Finance and Manappuram as well.
Yeah, of course. Means if you look at an NBFC's pack, we are seeing some sort of positive traction, and today we have seen that some of the companies has come out with a very decent results. M&M Financial Services has picked up the momentum, whereas the Shriram Finance, I see that the stock price has taken a good support at a 1020 level, and from that it is showing some sorts of a recovery, and this recovery has a further lag to improve on the high side, and on the high side the immediate resistance or upside potential that I see is around 1100 level. So yes, this particular pack is also showing the traction on the higher side.
And some of the auto anch names also, Kapil, taking center stage. Some good moves seen in that pack. Any favorites, and how do you expect generally auto to do after this kind of move?
Yeah, today some of the stock has started to do quite well. Means let's say from the auto ancillary perspective, Gabriel is the one particular outlier stock today. It has picked up the momentum, and for a very decent time, it has been in the positive momentum. So some sorts of a declining momentum can lead to the buy opportunity. And apart from that, there are certain kind of the stocks which has not picked up that much kind of the momentum, but the technical structure seems to be quite positive for them. So that is in one stock is in Endurance. So Endurance is the one particular pack that I am liking it, because the strong base formation is happening happening. Momentum is yet to pick, but these are the counters where the risk reward ratio is getting justified. So around the 2750, it looks to be in a good buy setup with the stop loss around the 2700 level.
And from the utilities point of view, some of the power stocks, Tata Power, or for that matter, we saw in the solar pack, Premier and Wari both getting impacted by a news. How do you look at them from a chart point of view?
Tata Power in a utility pack has a very strong uptrend priorly, but from a very recent time they have been underperformance. From past couple of trading sessions, they have been forming some sorts of a range bound momentum, but yet I am not seeing some sort of positive development on those particular stocks. So we'll find that the technical structure gets improved first, and then we have some sorts of a positive view on that. But at this particular point, I am not finding any sorts of a buy opportunity in the power or a utility pack.
Kapil? Kapil, your top picks in a market like this?
So for the coming days, I am quite bullish on the Berger paint. The Berger paint means the stock has quite declined and it is at a lower band of the multiple years. And today we have started to see some sort of positive traction. So in the Berger around 508, it is in a buy opportunity with a stop loss of 490. And on the higher side, we see the upside potential up to the 545. The another stock that is from the oil and gas stocks that has started to pick up the momentum and showing some sorts of upward bias. So that is the Chennai Petro. So in the Chennai Petro, around 1268, it seems to be a buy opportunity with a stop loss of 1240. And on the higher side, we see the upside potential around 1330.
Kapil, thank you so much for coming in and giving us a perspective. We'll let you go on that note.
Sure, thank you.
Well, that sets us up well from a technical perspective for the day of Wednesday. But let me slip into a very short break, take that breather, come back, talk more. Plenty to speak about. Plenty of earnings our way. And we'll also have Firoz Aziz on the other side to give us his perspective on how he's seeing the market. It's there's extreme amounts of sector rotation. We'll get a sense from him as to how to play it. Welcome back, and we're joined at this point by Firoz Aziz, who needs no introduction, frankly, but joint CEO at Anand Rathi Wealth. Great having you here, Firoz. Firoz, essentially, of course, one part of it is earnings, and I'd like to pick your mind as to how you're seeing the earnings play out. Of course, around 40% of the index now come out with numbers. But before that, there's so much of sector churn right now, Firoz. How should an investor go through that? Because it's becoming increasingly difficult, and I'm not just saying near term, but even over the last 3 to 4 years, there's been just so much sector churn. It's been difficult to hold on to investments over more than 12 months and still make alpha.
Yes, Harsh, like you rightly pointed out, the capital has lost its patience. So there's a lot of movement of capital between sectors, between segments also, between FII and DI as well. So I think the need of dynamism to create excess return is clearly established, and the need of dynamism is going up. And of course, and the short-term capital gains, if you're doing it directly, hampers your ability to move. And a large portion of the excess return goes in the differential tax between short-term and long-term, is one big impediment in managing direct equity portfolios. Now coming to how does one do it is you have to look at your asset or sector allocation largely not de novo, but you have to look at it from a delta standpoint. How much do you have? How much is the sector's allocation in Nifty or in NSE 500? Whatever you benchmark yourself, people benchmark fund managers very, very extensively, and they keep criticizing them. But when they're managing their own monies, when I see HNI, somebody who had 200 crores, I asked him, what are your barometers for your own self-assessment? He has 0 barometers, but he has a lot of opinion on what fund managers do with respect to excess returns. The point I'm trying to make is, when you're looking at sectors, look at it from a differential allocation standpoint. For example, banking is 29% of Nifty and 18% of NSE 500. So you have to look at the heavy sectors and keep that as your static part, and the peripheral sectors which have less than 5-7% of allocation in Nifty should be your oscillatory allocation.
Firoz, hi. Good evening. Can you also give us a sense of when you said there's a churn happening between sectors and within sectors? What we saw is private sector was getting a good amount of money inflows, but numbers were not so encouraging. So now the churn is happening to public sector. Do you see enough tailwind for the public sector going into the earnings?
I think so, but public sector has got some degree of re-rating in the recent past. So it is not like a private sector bank sector where it's some private sector banks. In fact, in the top 10 of Nifty and top 10 of Sensex, there are 4 private sector banks and 1 PSU bank. The private sector banks, if you look at their mean valuation in terms of PE or PP, they're quoting at 2 sigma lower than the mean and median valuations. Which is like a deep discount. So can I say that about public sector banks? The answer is no. So would I be more bullish from a long-term standpoint in private sector banks, especially given where we are now? I would say that way, relative valuation-wise, I would prefer a sector which is a subsector which is 2 sigma lower than its mean valuations.
But Firoz, I mean, earnings print doesn't support that, right? I mean, it's clearly PSUs all the way where earnings is concerned.
Yes, see, earnings from a short-term standpoint, they're not supporting. But if you look at NIMs, is not the only thing. NPAs are a decade low. We have not got the benefit of the rate cuts yet. And there is fee income, which seems to be increasing, and it can increase with the financialization. So, yes, if you go to the NIMs, and look at margins, of course, they've been stretched because if you do corporate lending more than B2C lending, then B2B lendings are going to put a squeeze on your NIMs. But I think from a long-term standpoint, over-reading into NIMs might be a little exaggerated by analysts.
Firoz, how do you look at some of the NBFCs in that scenario? We saw the big banks and having issues with maintaining their names, except for 1 or 2 ICICI banks standing out of that pack. But for NBFCs?
So I think NBFCs are a very high beta sector. When I have another larger proxy like a bank available at cheaper valuations, I would prefer that. See, of course, the NIMs are higher, but NBFCs today borrow from banks and then do the distribution of bank funds. So I think NIMs might exist today, but I think they will be squeezed over a period of time when you are a little too worried about the credit. In economic down cycles, I'll be really worried about NBFCs.
Broadly, from Q1 FY27, Firoz, what's the theme that really stands out? Something that you weren't penciling in, but it's come out and it's been a bit of a surprise for you, negative or positive?
I think FMCG is a little negative surprise for me, but not just from a result standpoint. I think they're not able to justify by their volume growths the kind of stretched valuations they command. And especially because their large portion of their free float is absorbed by index funds. Largely global index funds have taken away their free float. The valuations are not because of the fundamental business growth potential. It is basically lower free float, implied lower free float, not the actual lower free float. Defense, I think, is going to be a sector which I would be very positive about because there is going to be a structural change in terms of spending, and not a one-time spending by the government. And I think the export story seems to become a reality, and there is a multi-year order book. So I would say defense is something, and two-wheelers is something from a 1 to 2 year perspective. You can generate 2-3% or even 3-4% excess return over Nifty by adding heavier weight, active weight into these sectors.
How do you look at the mid-cap pack? It's been outperforming the broader benchmark index?
Yes, the mid-caps have outperformed because anytime domestic flows are the key reason of buoyancy, then it's going to be mid-cap and small-cap. Now, if you see FIIs have sold and they sell what they own, 41% or now 39% in 2019, 41.6% of the total Nifty free float was owned by FIIs. Now it is in 2026, the last I checked, March was about 39.1%. But your small cap index, on the other hand, NSE small cap 250, it was 19% free float owned by FIIs, and it's still 19% owned by FIIs. So FIIs have not trimmed their position in small cap. Why have they not trimmed it? Because FIIs largely operate on a passive index basis, either FTSE or MSCI, and which are the stocks which are fighting the Korea and the Taiwan AI story. It's not. It's the Indian banks who have lost money to those businesses because MSCI is where $1.8 trillion is being benchmarked both on passive and active. So the reason why mid caps and small caps have been buoyant is because the domestic money is propelling them, or at least creating a floor on good businesses in these stocks. So 28,000 crores of net flow in June and 3.89 lakh crores of SIP total money in the last financial year. And that should continue. And that was anticipated long back. I'd said 2025 maybe will be at 25K per month. I think we beat that. So I think domestic money is going to continue coming. And that's where there will be buoyancy in mid cap and small cap, good quality names. There is extensive, there are some businesses which are at very high valuations. That's why a bottom-up strategy in these two would be more sensible than a top-down.
Fantastic. Firoz, thank you so much. Super insightful as always. This time it was short, but insightful nonetheless, as always.
Pleasure.
Thanks. Okay, with that, viewers, completely timed out on this edition of Market Edge. Hope we gave you that edge, by the way. From Sajid, myself, everyone who puts this show together, thanks so much for watching. Stay tuned. More action on the other side.